Hi, I'm Stan, the Annuity Man, America's annuity agent licensed in all 50 states. We're here today to talk about deferred annuities. What, when, who, should you buy one? It's a very good question. We're going to go through the details. We might come to the point at the end that you say, hey, I don't even need a deferred annuity, but we need to cover what a deferred annuity is. And you're talking to the nation's #1 agent licensed in all 50 states, including yours, and we're going to go over those in detail. Hit the music. All right, producer, so I show up in this camouflage. Can you see my arms? Can you? Okay. Don't nod the camera. Say you can't do that here. So, yeah, so this is my, I'm always getting gear and I'm thinking, is this the craziest gear that I have? No, the craziest gear that I have are these socks, Annuity Man socks. No, do not order them. They used to be on my site, but they had my face. Can you get that, producer? That was when I had the goatee. I was really doing this crazy stuff. So, Annuity Man socks. I digress. Let's talk about deferred annuities. What is a deferred annuity? I can't say I hate all annuities because there's numerous types of deferred annuities. There's fixed index annuities and multi-year guarantee annuities and variable annuities, deferred income annuities, qualified longevity annuity contracts. Whew, that's a lot, right? So how do you know if you need one? Don't listen to your agent. They're going to say you need one. You might not need one, but how do you determine it? 2 questions. Remember those. Number 1, what do you want the money to contractually do? And number 2, when do you want those contractual guarantees to start? That's it. So if you said, hey, I need market growth and I just kind of need it to happen, you don't need an annuity. Annuities are contracts. Remember that. They were first developed in the Roman times to create lifetime income streams, and annuities have a monopoly on the lifetime income stream market. Annuities are the only product on the planet that do provide a lifetime income stream. So let's talk about the deferred annuities, the category deferred annuities. Remember, there's many types, but what are the deferred annuities that just do income? First, deferred income annuity, okay? You can defer that up to 13 months as far out as 40 years, but that is a straight pension plan. It is actually the cousin of the single premium immediate annuity. You could look at a single premium immediate annuity and say, yeah, that's deferred because you can defer it as short as 30 days up to a year. Deferred income annuities are 13 months to 40 years. But with both of those, they're very simplistic products, easy to understand. A 9-year-old can understand them. So you're just deferring the money to a starting point that you determine for lifetime income stream, single life or joint life. And that income stream is primarily based on your life expectancy at the time you take the payment. Now, deferred income annuities have a sister product called a Qualified Longevity Annuity Contract that can only be used in, say, a retirement plan, some retirement plans, and your traditional IRA, not a Roth. Once again, no moving parts, no annual fees, but it is a future pension plan that you can turn on as late as 85 in your IRA, but you don't have to start that late. You can start it anytime before that, say 72. Now, those are the income type of annuities. Now, kind of an asterisk to that, income riders, which isn't an annuity product, but it's an attached benefit for future income, those can be attached at the time of application to deferred annuities like variable annuities or fixed index annuities. I know that's a lot, but let's go through it again. These are the deferred annuities for income. Single premium immediate annuity, you can defer 30 days to a year. Deferred income annuity, 13 months to 40 years. I know you're saying 40 years, that's a lot. That's for the wandering ambiguity children that you're trying to set up for a future pension plan. Nod your head? Of course. Now, so you deferred income annuities, then you have the qualified longevity annuity contracts, again for the traditional IRA or inside of your retirement plan, and then you have the income riders attached to an indexed annuity or variable annuity for future income guarantees. All of those are transfer risk products, meaning they're going to pay as long as you live, forever. The annuity company is on the hook to pay, and we can structure all of those so that the evil annuity company does not keep a penny. In other words, if your Learjet hits the mountain, whatever's left in that account goes to your beneficiaries. All right, so we talked about deferred annuities for income. Let's talk about deferred annuities for, say, principal protection and or interest rate type growth. Okay, so we've done the income side. Remember, immediate annuities, deferred income annuities, qualified longevity annuity contracts, and income riders attached to a deferred annuity like variable annuities or index annuities. So If you said, Stan, I don't want to lose a penny. I don't care if the markets go to heck in a handbasket, I don't want to lose a penny, but I want to make some interest. There's two fixed annuities that fit that bill, and they're deferred annuities. One is a multi-year guarantee annuity, MYGA, M-Y-G-A. It's the annuity industry's version of a CD, okay? It works exactly the same. You give the annuity company amount of money and choose the specific term, and they're going to pay an annual interest rate. And at the time of this taping, the interest rates will range anywhere from 3% on a 3-year and more than 3% on a 5-year. So that changes, and it depends on the state you live in, etc. Now, the other CD type product that you can never lose a penny on is a fixed index annuity. I know a lot of you out there that say, wait a minute, some guy told me that, it gets market returns. In fact, I got a call the other day, somebody, during this COVID thing, at the time of this taping, there's the COVID scare, and there's a lot of fear selling with index annuities, and the guy said, well, this guy told me that, I'm going to get market returns and that's going to protect the principal. Well, only part of that's true. The protect the principal part of that's true. With index annuities, you're not going to get market returns. It was designed in 1995 to create CD returns. And just think logically, if it sounds too good to be true, it is every single time. So with indexed annuities, if you could get market type returns and protect your principal, then that's all the Fed would buy. Exactly. So don't believe the hype. It's not a bad product. It's just a CD product. So those are the two. Hey, Stan, I don't want to lose a penny. I'm going to put it in a deferred annuity. I want it to grow tax deferred in a non-IRA account. That's a multi-year guarantee annuity and a fixed index annuity. The other type of deferred annuity is a variable annuity. I don't sell those because I don't sell anything that goes down. That doesn't mean variable annuities are bad, but variable annuities are in essence mutual funds that's wrapped with a life insurance policy. Not a bad thing. They were put on the planet in 1955 for tax-deferred growth using the mutual funds. The annuity companies, for whatever reason, call them separate accounts. But that's the universe of deferred annuities. So you got really two, draw a line down the middle of a page. Here's the income side of them, the income side of the deferred annuities, immediate annuities, deferred income annuities, qualified longevity annuity contracts, and then income riders. And then over here you have kind of here's the principal protection side, multi-year guarantee annuities and index annuities, fixed index annuities, and then kind of down here you have the variable annuities. So when people say, well, never buy a deferred annuity, what are they talking about? Which type are they talking about? That always brings me back to the I hate annuities mantra. I hate all annuities. Which one are you talking about? That doesn't mean annuity should fit in everyone's situation. They're not for everybody. Again, you have to ask the two questions. What do you want the money to contractually do? And when do you want those contractual guarantees to start? Hey, I encourage you to get the books that I've written on all of these products. The deferred annuities I talked about, I've written an owner's manual on each one, and I'll send it in the snazzy gold foil mailer to you. Please hit the subscribe button, hit the bell. I think the bell little thing that gives you the alert, do that as well. And don't forget, you can comment under here. I respond to those. I mean, you can hit me up at stan@theannuityman.com or go to theannuityman.com, or if you just want to hit comments under here, interact with me, and if you want to schedule a call, you're going to be talking to me, not some underling young annuity man junior. You're going to be talking to me one-on-one. So I encourage you to do that. Go to my site to use the proprietary calculators. I put these videos out every single day, and I have a podcast called Fun with Annuities that is released every single week. Oh yeah, and I've done another video on how to maximize current rates. Might want to take a look at that one as well, along with the other ones that I've done. See you next time.